Today, we will review Tesla's third quarter result by extracting 16 points that's most relevant to the shareholders. First is about the electric vehicles business. Even though the EV industry overall faced declining sales in the third quarter, Tesla's Q3 sales actually increased and achieved record deliveries in the Q3. However, if we turn this deliveries number into LTM in the rolling basis, we can see that over the past year, Tesla's EV sales is stagnant in terms of the growth. And in the earnings call, Elon Musk projected that the vehicle sales will grow between 20 to 30% next year, but he didn't provide any tangible reasons. Also, if we look at the inventory days, the number has increased from 16 days a year ago to 19 days in the third quarter, which is 19% increase and is obviously not a good news to the shareholders. And as a shareholder, it was nice to hear that Cybertruck sales was the third highest in the USA. And since the first and second most sold EVs in the US are Model Y and Model 3, Tesla now has the top 3 EV models in the US. Next section is about the profit. If you guys remember, the news that Tesla cut its prices was considered a bad news for the company. However, in the third quarter, Tesla's GP margin actually improved by 10%, and it reached 19.8%. And this was thanks to the efficiency improvement of the manufacturing process. And as a result, the company's overall GAAP net income number was $2.2 billion in the third quarter. And as we can see in this graph, Tesla produces pretty consistent profits. And Elon Musk boasted that no other EV company is even profitable by selling electrical vehicles. And Tesla is able to achieve this because its cost per vehicle is quite low, and in the long term it continues to decrease. And the management stressed that in the third quarter, this number was actually below $35,000. And in the first half of 2025, the low-cost vehicle will come out, and the continuous reduction of the cost per vehicle is a high priority for the Tesla management. As we saw, since Tesla produces pretty consistent profit, I looked at its EPS number, which can be normalized at about $3 per year. And using the stock price, we can extract the PE ratio of 90 times. Obviously, this is a quite high number even for a growth company for Tesla. And the next significant growth is expected to come from the FSD. So now, let's look at several key factors regarding this business. First, the autonomous driving data is keep piling up. And as of Q3, Tesla now has over 2 billion miles of cumulative drive data on FSD. And about half of this comes from the version 12 driving data. And not only is the data is accelerating, but the direct revenue from this FSD segment is also increasing. And this was mainly due to the high adoption of FSD in Cybertrucks, and also because the actually smart summon, which had a good reception in the US, contributed to higher FSD adoption. And now, Tesla produces about $326 million of relevant revenue per quarter, which means it now produces over $1 billion of FSD revenue per year, which is meaningful, but at the same time, this is only about 1% of the total revenue for the company. But this growth is expected to accelerate. After the 1010 event, the take rate for FSD has improved substantially. And this means in the fourth quarter, the FSD revenue will continue to go up higher and higher. Also, the version 13 will be released soon, and according to Musk, the company is expecting to see about 5 to 6-fold improvement in its safety data. And by the second quarter of next year, the FSD will be safer than human and continue to improve even further. And if all goes according to the plan, Tesla is expected to launch the robotaxi next year to the public in California and Texas. And the AI compute capacity, which allows this FSD to be possible, continues to grow quite well. Just in the third quarter, Tesla was able to add 29,000 H100 NVIDIA GPU chips. And in October, it's expected to add another 21,000 of those chips to its data center. And despite such aggressive investments, Tesla has tons of cash. For example, its cash pile increased by $2.9 billion, and now the company sits on $33.6 billion of cash. Not only that, as we can see in this long-term cash flow data, the company still produces excess cash despite aggressive AI investments. So unlike in the past, Tesla is not directly relying on the capital markets to continue its AI investments. And finally, let's see the two factors that's coming from other business areas. The most positive data for this quarter actually came from the storage and charger business. The energy storage deployments are expected to more than double year over year in 2024. And as we can see here, the supercharger network continues to expand with over 2,800 new stalls in this quarter, which is a 22% growth year over year. This segment's revenue contribution was only 6% 5 years ago, but in the most recent quarter, it increased to 9%. Also, because the profitability of this business is high, it contributes about 10% of the company's overall profit. Finally, there was no major update on Optimus, but Musk stressed that Tesla has the most advanced humanoid robot in the market at the moment. And related to such positive statements that comes from Elon Musk, he claimed that Tesla produces the best AI chips in the industry and claimed that no other cloud company has such semiconductor capacity like Tesla. However, this seems to be a bit too aggressive, especially considering that Google and Amazon are also designing their own AI chips. There was another statement like this, where Elon Musk claimed that Google's Waymo only has about 1,000 autonomous driving cars. However, Tesla is producing about 35,000 cars per week. I mean, the numbers here are true, but we need to admit that Waymo's cars are fully autonomous at the moment, and even though Tesla cars improving, it's not quite fully autonomous yet. So these were the key things I got out of Tesla's Q3 earnings call, and I will see you guys again in another AI tech company third quarter earnings update. Thanks guys.